Good afternoon, everyone, and welcome to the Monday Open hosted by Vantage Markets Australia's private client group. My name is Jeff. I'm based in Sydney, and I'm joined by Ollie.
How you doing?
Okay, good, Ollie. Uh, I've been told by marketing not to complain about us being in separate rooms, so I won't. Um, we've done a fair few of these, so you guys all understand the way that they normally work. We'll go through the events that affected markets last week, what Ollie and I and the rest of the team are looking for this week. We'll go through some technical analysis as well and maybe give you a bit of a trade idea. And we'll talk about some questions that have come up and give you some answers for a broader network. So sit back and enjoy the next 15 odd minutes. Hopefully, you learned something. So last week, Ollie, did you want to run through some of the events from last week?
Yeah, absolutely. So, started last week. Obviously, there's a lot of public holidays, a lot of bank holidays going around the place. We had Australia, New Zealand, the UK, as well as multiple countries in the EU all out to start the week. So the first big, data announcements which came out was the UK PMI readings. Manufacturing coming in at 44.0 as expected, and the services printing 48.9 against the 51.5 expectation. So both the ratings suggesting contracting UK economy, placing downward pressure on the pound, with the pound US dollar down 0.23% from the announcement till current. The next big data announcement, of the week was the US unemployment claims, coming out at 222,000 as expected versus the 216K previous. So Fed Reserve Governor Christopher Wallace actually warned this number could continue to rise if the aggressive tariff levels are reinstated, as the firms begin to lay off workers, while it also emphasised that if the labour market continues to decline, additional rates would likely follow, with the cutting rates obviously putting further downward pressure on the USD to continue the trend of the last couple months. This does, however, set him apart from Fed Chair Powell, who has cautioned about cutting rates, stating it might lead to persistent inflation. And the last one we're going to look at is the Canada core retail sales, printing 0.5% versus the negative 0.1% expectation. So a rising retail sales report typically would be good for the Canadian dollar, although we didn't see too much of a positive price swing off the back of the report, with the dollar outperforming the loonie from announcement till close of the week. The sentiment around the Canadian dollar remains cautious with all the ongoing tariff news. However, the upcoming federal election is expected to move the currency. So I guess that kind of turns in pretty well towards this week. I'll turn it over to you, Jeff.
All right, so quiet week last week with Egg Day being in the middle of it all, and this week we've got a pretty busy week as well. So today we've got the Canadian federal election, and the polls are that the current leader of the Conservative Party, Carney, will win and retain that. He's the one that that bit back at Donald Trump a little bit about the tariffs, so it'd be nice to see him actually get elected in, so that he can bite back a little bit harder as well going on. We've also on Wednesday got the Aussie CPI number. That CPI is expected to ease on the yearly number from 2.4 to 2.3. That easing will probably make the local Reserve Bank a little bit more comfortable with maybe another interest rate easing. But that next meeting will be after the federal election. So they've kind of held off because central banks don't like to tend to do very much with monetary policy while there's an election campaign going on, because it tends to favour the ruling party. But I think if we do see an easing of that inflation here locally, there's a very good chance that we might see a cut at the next RBA meeting, probably another 25 basis points. On Thursday, we've got the BOJ policy meeting. They're going to leave rates unchanged. They're not going to do anything there. They're very concerned about tariffs over there in Japan. They had a meeting with one of the ministers over there in the US, and apparently left in the middle of a meeting, got on a plane, and went back home. That's how bad it was. So, I don't think they're going to be doing anything with their policy amid the big tariff stuff. Interesting enough about Japan as well is that last week, California is now a bigger economy than Japan. California has been one of the top 10 economies for a long time. Obviously, a lot of those tech companies are based in Cali, but it is now bigger than Japan. On Friday, we've got US unemployment, which is expected to remain unchanged. And then here, of course, on Saturday, we've got that election. We're all looking forward to getting up on Saturday morning, probably in the rain, to go out and vote. Uh, that's this week coming up. I think the election. My view on the election is that the Labor Party will probably be returned with a slightly slimmer majority. We haven't had a change we haven't had a first-term government lose an election since 1913, so more than 110 years. What generally does happen is that on that second election for the governments, they generally do tend to lose a little bit of their majority. I think that'll happen. I don't think that Mr. Dutton has really endeared himself very much to the Australian public. He's still trailing Albanese pretty far in the preferred Prime Minister polls. Honestly, I think I'd be very surprised if the Labor Party doesn't win. That's this week. Did you want to do some technicals there, Ollie?
I would love to. Just share the screen. Unreal. So the first market I wanted to look at was the pound US dollar. So I'm looking on the daily chart here. So pretty much what I'm seeing is an upward trend. This is coming back from November 2022 up till current. So you can see the resistance levels, so the support levels down the bottom have been gradually increasing up over time. As well up the top, we've got the resistance levels are kind of following on the same trend. So this is kind of basically what I'm seeing on the long-term sort of trend. I would expect this price where we currently are to keep going up, probably towards this 1.36 sort of level, before testing that one, potentially swinging back down. So then if we kind of look that into the 4-hour chart on that same market, looking on the Bollinger Bands, we can kind of see it's had a pretty steep uptrend over the recent, looks like over the recent weeks. So you're hitting off that top sort of level. Now it's kind of swinging back in towards the moving average around the middle, with, I guess, the two bands kind of converging as well, suggesting a breakout is potentially imminent for the pound US dollar on this one. So second market I wanted to check out as well was the Australian against the Swiss. So I can see a pretty decent downtrend on this one as well. We can see it's kind of been going back pretty much since 2020, really, with the Swiss being a bit of a safe haven currency, while the Aussie is kind of seen as a bit of a more risky currency, or more for like the risk sort of traders. So you can see, the support levels down the bottom have been gradually increasing down. Likewise with the support, so with the resistance levels up on the top here have been gradually getting lower and lower. So I'm kind of expecting this trend to continue to go as we go forward. But right now, where the price is sitting, it is sitting kind of in the middle of this downward range sort of area. So potentially in the short term, probably see this kind of push up maybe towards this 0.56 sort of range, kind of push up around here, maybe swing back down. And this kind of also follows on, if we look onto the 2-hour chart for the Aussie dollar against the Swiss, looking on the Bollinger Bands here, it's kind of been playing a bit of yo-yo with the moving average in the middle here. It's kind of going up and down all over here. We had a bit of an upswing, looks like towards mid to tail end of last week. And it's kind of broken down past the moving average to hit that lower band while it's converging as well. So it's similar to the previous currency as well. We are expecting potentially a bit of a breakout there, potentially going up. Once it's touched this lower band, probably push up a little bit. And yeah, I guess it's got to see where that kind of goes as well. With all the tariffs, it's been a lot of favor towards the franc, as it is seen as a bit of the safe haven currency, as I mentioned just before. So yeah, I would expect that to continue to push up, probably towards this top sort of level up here. But what do you reckon on that one, Jeff? Do you reckon the Swiss is going to do all right against the Aussie?
It's a tough one, right? I like the Swissy generally. I think in times, historically, the Swiss has been a real safe haven currency. I think it's losing that luster a little bit at the moment. I think generally speaking, people prefer the yen. And Aussie yen, I think the chart of Aussie yen would look very similar to the chart of Aussie Swiss. The problem with the Swiss franc as a safe haven is that just the free float of the currency is really quite small. There's not a lot of actual Swiss francs that are out there in the market. So when people do pile into it, it does tend to swing pretty hard. Honestly, Aussie is the proxy for China. It's the proxy for risk. If you wanted to, if you did think that the market wanted to go risk off, as we used to say, you'd probably want to sell the Aussie against the yen or the Swiss.
Unreal. All right, so as well, yeah, might turn this one back over to you. I guess we'll get cracking on to the questions for the week.
All right, awesome. So we had 2 questions. How about I do the first one?
Yep, sounds great.
All right, cool. So this is one that we get asked quite a lot. And obviously, sometimes when these questions come up, we do like to share them with a broader audience. This is one of my pet things to talk about is what markets are good to trade for my trading schedule. So obviously, I mean, I'm going to assume that most of the people that we're speaking to or that are listening to this right now are Australian based. Some people want to trade before work. Some people want to trade in the afternoon. Some people want to trade in the evening after dinner. It's cool. Trading, the markets are open 24/5. So anytime during the week, you can log in and have a bit of a crack at it. The way that I always like to look at it is that you kind of follow the sun. So if you're trading first thing in the morning in Australia, you should be looking always generally at the markets that are open during the time that you want to trade. So first thing in the morning in Australia, we've got Australia. We've got New Zealand that are in. So the Aussie and the Kiwi dollars are going to have their most volatile movements in our time zone. Why? Because that's when the data comes out. And then kind of early afternoon, we're going to get Japan come in. So the yen starts to become a little bit more important. If you're looking at that after work kind of time, it's you're talking about European time. So I'd be looking at the euro, sterling. If you like equity indexes, the DAX and the FTSE are pretty good. If you're an insomniac and you do like to trade late into the US session, the euro is probably the biggest. The dollar euro is probably the biggest for the US session, or the US equity indexes. Just be a bit careful with those gaps on the US equity indexes because they do have a hard close. What about question 2?
All right, for question 2, so what should I look at with the Bollinger Bands? It's an interesting one. I actually had this conversation towards the tail end of last week with one of our clients, pretty much just going over a few of the technicals and looking at what to actually look at with the Bollinger Bands. So I guess going off the graphic just on the screen there. So there are the 3 lines. So we got the upper band, which is the top level. We've got the moving average floating through the middle as well. And we've got the lower band down the bottom. So essentially, it's what does it look like when we put all 3 of them together? So we're kind of looking at 3 things. So the first one is the volatility. So essentially, the wider bands is the more volatile. Vice versa, the narrower bands is less volatility in the market. So that's kind of the first one that we might look at. Tighter bands, we might look at a bit of a breakout. The volatility might widen out there. Second thing we do want to look at is the breakouts. So if the price breaks through an upper or a lower band, it may signal a potential continuation of a trend. The other thing that we want to look at on top of that is the overbuys and the oversells. So pretty much the price touching or moving outside the upper band, which I believe we can see just towards the top right of that graphic just on there, is signaling that the market is potentially overbought and is poised to sell or drop in price. Likewise, if the price is touching or moving outside the lower band, which I believe we can see towards the left of that graphic there, it's signaling that it's potentially oversold. So the price of the market is poised to buy or it's poised to go up. Basically in a nutshell for that one. But yeah, is there anything else that you think I should be looking at with the Bollinger Bands, Jeff?
No, what I like with the Bollinger Bands is when it contracts. Excuse me. I like to see it contract because, as you said, it usually is a really good indicator for an impending explosive move. And then when the market does actually widen out, or when the bands do widen out, they're normally pretty good signals. So watch for the ends of the bands and see what they're doing, whether they're pointing inwards or outwards. When they are pointing inwards, expect a little bit of sideways consolidation. This is one of my favorite indicators, as you know, Ollie.
Yeah, likewise. I think I've used it on most of the charts I've got.
All right, cool. Well, look, that's about it for today. If you've enjoyed this, the video will be up in our VIP trading room once it's finished. It'll also be on our YouTube channel. If you haven't visited our trading room, please do. There's a lot of our resources that we post in there. We post a lot of articles to interesting, newsworthy events that are market moving potentially. We also do our weekly technical update that goes into there. And if you are someone who particularly likes fundamental analysis with your trading, please do subscribe to the Private Client Daily Update, which is emailed out and also posted to that trading room every morning. Thanks very much. I'll see you later, Ollie.
All right, sweet. Cheers, Jeff. Have a good one.